this emerging debate around government involvement, government stimulus, whether it's on the monetary side or the fiscal side, whether it's propping up essentially some zombie companies versus letting capitalism, ugly, painful, difficult as it may be, do its work. How do you see it?
Look, I'm generically in agreement with that, but these circumstances are strange beyond belief. The time for decisions like that will be when the economy starts crawling out of the deep hole and I don't want to say gets completely back to normalcy, but is somewhat on the path back to normalcy. Then we should let zombie firms go. But it's pretty hard to identify zombies right now when doors are shuttered and people are afraid to go out.
Yeah, which I think really speaks to what you're getting at in your op-ed, which is we're seeing this surge in coronavirus cases right now, which does seem to be, based on some of at least the commentary we're getting from companies, for example, be having an impact on consumer sentiment right now versus stronger or recovering economic data that may be a little bit more dated right now. How do you see the state of the economy? How concerned are you about this idea of a double-dip recession?
Well, I'm quite concerned, and it's regional, of course. I mean, on the first big wave of this horrible disease, it was centered in the Northeast, especially where I live, in New Jersey and New York and Connecticut. The second wave is centered in the Sun Belt. And it's presumably, it's just as virulent, if not more virulent than the first wave. As we all know, the national number of cases is higher than it was at the peak in April, a lot higher. And we're not talking about states where practically nobody lives, like Wyoming and Montana. They have problems too, but not that many people live there. We're talking about California, Texas, Florida. That's a lot of people. That's a lot of the U.S. GDP. And one thing we learned from the first horrible wave is that people started sheltering in place and not going out before the government ordered it. So even though the governments in those states, California accepted, may be a little behind the eight ball, the people may not be behind the eight ball, and we're not going to see that in the data for a while.
Alan, it's David Faber. There's a decent amount of debate right now about whether or not to extend the $600 additional benefit to unemployment insurance. Where would you stand on that, and what would you tell congressional leaders who are arguing on both sides right now about whether that should be extended?
Well, if they would listen, which they won't, I would show them a Wall Street Journal op-ed that I wrote a couple of months ago. Look, there's an obvious solution to this, which is to maintain the number of dollars flowing, but restructuring it. We really don't want, I don't even believe Congress thought this through, some people getting 150, 175, 200% of their pre-COVID wage when they were working in unemployment benefits, especially if we think we're going to reopen and firms want to bring people back online. But cutting the dollar flow in this emergency would be a catastrophic mistake. We can restructure it instead of the $600 a week, excuse me. We could raise the replacement rate. That is, what fraction of your previous wage gets replaced by unemployment benefits while maintaining the same number of dollars. And by the way, that would leave over enough money to pay some bonuses to people that go back to work. So don't cut the dollar flow, but restructure it is the right thing to do.